for the year ended so and so in the books of PQ Limited. Okay, let's prepare it. Okay, now first we'll put the opening balance. Okay, so here we are assuming that opening cash and bank balance is 0. Okay, so opening balance, okay, we are assuming it is nil. Okay, then first we'll put cash from operating activities. Okay, so we'll leave some space for working, and then we'll have cash from investing activities. Okay, so we'll leave some space and we'll put cash from investing activities, and again we'll leave some space and then we'll have cash from financing activities. Financing activities. Okay, now we will see all the adjustments and the transactions one by one. Okay, and accordingly give an impact for all this. Cash from investing activity, then you have cash from financing activity also. Okay, so let's see. Now the first one is equity share capital. There is no change, so there won't be anything. Capital reserve, profit on sale plus revaluation. So we have prepared one working note for capital reserve. Let's see that. Working note number 4 is account, working note number 7. So capital reserve, out of 49,200, 43,000 in on account of revaluation of freehold property. Since there is no cash inflow or outflow, this won't have any impact on your cash flow statement. Profit on sale, there is a proceeds from sale of freehold property 6,200. So since this is a proceed from sale of asset, it will be included in investing activity. So in investing activity, I'll put it as proceeds from sale of freehold property. Okay, so proceeds from sale, we have received it, right? There is an inflow, so the amount will be positive. So inflow of cash. Then the next one, 8% debenture, interest on debentures to be paid for 6 months, 50,000. Okay, so 8% debentures. So debentures, there is an increase in the balance of the debentures. How much is that? 50,000. Okay, so this 50,000 as the proceeds received from your debentures. Okay, now if you see, out of 50,000, 1,000 was a debenture discount. Okay, so proceeds received from your debentures are 49,000. So cash that is received from the debentures is 49,000, and since it is received from issue of debentures, it will be included in financing activity. So under cash from financing activity, I'll put proceeds from issue of debentures. Okay, how much will that be? 50,000 minus 1,000 discount. So how much is that? 49,000. Since there is a inflow, this will be positive. Okay, so the debentures is done. Okay, now there is one more, 8% debentures. So interest on debentures to be paid for 6 months. Okay, now we'll see the working note for debentures, right? So debentures working note, interest on debentures, how much is that? 2,000. Okay, Now this interest on debentures, if you see this point number 4, the net profit for the year was after crediting profit on sale of plant and charging debenture interest. So this debenture interest was included in your net profit. So we are calculating your cash flow from operations under indirect method. So what we have to do, we have to add back this interest on debentures in your cash from operations and reduce it from your cash flows from financing activity. So cash from operating activity, first I'll put net profit for the year. Okay, we'll put the amount later. Now add interest on debentures. How much is the interest on debentures? 2000. You have to add it back to your net profit since it's a financing activity. And then from cash from financing activity, cash flow from financing activity, you have to put interest on debentures. Okay, and since this is a outflow, we are reducing it, negative. So 2000. Okay, then next, okay, next is what? Plant and machinery at the cost, depreciation on plant and machinery. So we have a working notes for plant and machinery and depreciation. So we will take it from there only. So in plant and machinery at the cost, if you see your plant and machinery account, memorandum account, there are two things. One is the sale of plant and machinery at 7,000 and purchase of plant and machinery at 78,000. Now since purchase of an asset is an investing activity, the effect of these two we will include it in cash flow from investing activity. So in cash flow from investing activity, we'll put purchase of plant and machinery. Okay, since there is a cash outflow, I'll put it in the bracket 78,000. Right? Then proceeds from sale of plant and machinery. Okay, how much is the amount of proceeds on sale of plant and machinery? Let's see here, 7,000. So 7,000, I'll put it positive since there is a cash inflow. Okay, now let's see the account again. Okay, then provision for depreciation 13,500, there is no impact on cash flow. Then to profit and loss account 2,500. So profit on sale of plant was included in your profit and loss account 2,500. Okay, so since this is not an operational profit, we have to reduce it from your profit and loss account in your cash flow from operations. So less your non-operating profit, that is profit on sale of plant. How much is that? 2,500. Okay, then next let's see accumulated depreciation account now. So, okay, provision for depreciation memorandum account, you have on credit side you have balance brought down 0 to balance carried down 14,400. Okay, then there is one transfer entry of 13,500 from your provision for depreciation to plant and machinery, that was for the sale of your plant and machinery, so it has no impact on your cash flow. Then there is one more, by profit and loss account 27,900 depreciation for the year. Now depreciation for the year is again a non-cash expenditure. So while calculating cash flow from operations, okay, or from operating activities, from your using a indirect method, you have to add back this depreciation. So 27,900 we have to add back to our net profit. So add depreciation for plant and machinery. How much is that? 27,900. Okay, we have to add it back since it's a non-cash expenditure. Okay, now the next one. Okay, now next is debtors. Okay, so debtors 50,000, there is an increase in the debtors by 50,000. Okay, so what we are doing is this increase in the debtors of 50,000, we have to reduce it from your net profit in cash flow from operating activities. Since debtor is a current asset, increase in the current asset is required to be reduced. Okay, but if you see, there is a provision for doubtful debts of 3,300. Okay, so usually what has been done is your debtors 50,000 minus 3,300. Okay, that is your net debtors are required to be reduced from your cash flow from operating activities. Okay, so what I'll do is I'll leave some space, okay, for some other working. If there is some other working, I'll leave some space. Now I'll put here, okay, operating profit before working capital adjustments. Okay, so it will come here. Now working capital adjustment, one is the increase in debtor, so we have to reduce it, less increase in net debtors. How much is that? 50,000 minus how much is the provision for depreciation? 3,300. So 3,300 minus 3,300. So this comes to 46,700. You have to reduce it. Then the next adjustment. Next adjustment is stock and work in progress, 38,500. So since the debit balance has increased, there is an increase in the stock and work in progress. So again there is an increase in the current asset, we have to reduce it. So again the next adjustment below debtors is less increase in stock and work in progress. How much is that? 38,500. Okay, now the next one. Next is creditors 11,800. Okay, so there is a increase in the credit balance of creditors, that is creditors have increased, right? So now if you see, there is a increase in the creditors, that is your current liability, so we have to add it back. So add increase in creditors. How much is that? 11,800. Okay, so now the next adjustment. Net profit for the year is 76,500. Okay, that includes your profit on sale of land plus debenture interest. So 76,500 is a net profit. So we have left a space here for our net profit. I'll put it 76,500. Okay, now the next one. Dividend paid in respect of earlier years, 30,000. Now this is a dividend paid. Okay, so since this is related to your capital, dividend paid for the earlier years, okay, there won't be impact of this on your net profit since it belongs to earlier years. Now what we will do is, this dividend is a financing activity, so dividend during the year we have to reduce it from financing activity. Since the dividend is paid, there is a cash outflow earlier year. How much is the amount? 30,000. Okay, now the next one. Provision for doubtful debt, we have considered it above while considering data. Trade investment at a cost 47,000. Now there is an increase in the value of trade investment. So trade investment is your asset. How much is the increase? 47,000. Okay. So this 47,000 we'll put it in your investing activity. Okay. So increase in trade investments. Okay, how much is the amount? 47,000. Since there is a cash outflow, I'll put it negative. Okay, now if you see all your transactions are done, okay, now even your adjustments are done. Capital reserve, that and adjustment is done. Then plant and machinery adjustment is done. Issue of debentures adjustment is done. And net profit was after crediting profit on sale and charging debenture interest. So that is, we have reduced the profit on sale of plant and added debenture interest to find out our operational profit here. Okay. So now let's calculate this. 76,500 plus 27,900 plus 2,000 less 2,500. So operating profit before working capital changes is 103,900. Okay, less 46,700 less 38,500 less 11,800. So this gives you 3,500. 3,500 is your net cash inflow. Okay, since it's positive, so net cash flow from operating activity. Now let's check about investing activity. Okay, how much is the investing? So 6,200 minus 78,000 plus 7,000 minus 47,000. So it comes to 111,800 negative. So this is net cash outflow from your investing activities. Okay. Now let's check financing activity. Financing activity is 49,000 minus 2,000 minus 30,000. So 17,000. So 17,000 positive. So net cash inflow from your financing activity. Now if you total all this, what you will be getting is 111,800 negative plus 3,500 plus 17,000. You will be getting 64,300 negative. Now the 64,300 negative is your overdraft bank balance. Okay, it should match here with your overdraft bank balance 64,300. Once it matches, now your cash flow statement is correct. Okay, this is one way of cross checking. So your OD bank balance as at the end year, or you can also say increase in OD balance. Okay, since the changes, we are not given a trial balance, we are given only increase or decrease in the account, and we are, for our convenience, we have taken opening balance as 0. You can take this as increase in the OD bank balance as at the end of the year. So thus there was a 64,300 shortfall, okay, which needs to be which is borrowed by the bank using your OD facility. So this was about the cash flow statement, okay, using indirect method. Okay, whether direct or indirect method, your cash flow from investing activities and cash flow from financing activity will be the same. Only the change will be in cash flows from operating activities. Okay, so this was an example of cash flow statement. Thank you.